We had a deal. It was a done deal. And then they broke it. They always break it. We've had 10 deals with these people, and so we're just going to hit them very hard. And we're gonna keep the Strait, and we'll probably run it. We'll become the guardian of the Strait. Maybe we'll call it the guardian angel of the Strait. And we should be reimbursed for that. They're a bad group of people. They've been this way for a long time, and right now they're getting their kicked.
The world's most important oil choke point remains at the center of renewed fighting between the U.S. and Iran. President Trump says the U.S. is taking over the Strait as oil markets brace for escalation. Welcome to the Big Money Show. I'm Taylor Riggs, along with my co-host, Dave McDowell, Brian Brenberg, Jackie DeAngelis, and with us for the hour, Bahnsen Group founder and managing partner, David Bahnsen. Great to have you.
Great to be here.
So President Trump announcing that the U.S. is reinstating its blockade on Iran, saying that ships seeking safe passage through the Strait of Hormuz will face a 20% charge. CENTCOM is continuing strikes in the region. The administration says it's all about leverage.
It's open, as Central Command has said, and most of the targets that we've hit the last several nights have been directly aimed at Iran's radars, sensors, drones, and missile batteries right there on the Strait to eliminate and degrade their ability to attack the global economy. So we're going to take that leverage off the table in terms of the Straits of Hormuz. The negotiations are continuing on the nuclear program around the world. We're turning the screws on the economy, and President Trump will ensure Iran never has a nuke.
All right, David, so we're going back to the Iranian blockade. What do you make?
Well, look, a lot of the geopolitical side of it, foreign policy strategy, is outside of my domain. I very much believe that the blockade is an effective way to deal with putting the pinch to Iran. I don't know if this thing is going to be able to end without further military escalation or not. Many I talk to and trust and follow and read believe that further military escalation is going to be needed. As far as the economic side of it, there's no question that Strait of Hormuz being closed has an impact, and Iran knows that. And there's nothing Iran wants more than to maintain the leverage. The blockade moves the leverage from them to us, but it hurts our economy in a midterm year. So there's no perfect solution here. There's a lot of trade-offs. It's complex, and markets are just only focused on one thing, that it is going to end one way or the other. Markets are right, but as far as what's going to happen between now and then, my view has just been nothing more than I don't trust anything the Iranians say.
Yeah. Brian, I think, correct me if I'm wrong, you've been in favor of the blockade, right? Because it cuts off the choke point for their revenue. And if you starve them of revenue, then they lose all the leverage that they think they have, though I guess I would argue I'm not sure that they have as much leverage over the Strait as maybe they think they do. How do you think about sort of returning to economic freedom in an Iranian blockade?
Yeah, blockade means bad guy ships don't move.
Yep.
All the good guy ships are supposed to move. That's up to the good guy ships, by the way. They have to decide, so you can say it's open, but they're the guys who ultimately decide if they think it's open enough for them to go through. I'm curious to know, David, what you think about this 20% charge thing. You like that? You okay with that?
The idea of charging the...
Well, President Trump's saying if we're going to keep it open, if we're going to fight the bad guys to help ships go through, we want you guys to pay us 20% of the value of your cargo. I think that's what the 20% is, the value of your cargo.
I'm not sure.
Something like that. Let's just say that's it.
I don't know if he knows exactly what it means.
I don't know if he does either.
I think what he's doing is just putting out there something for leverage, trying to get more support. He doesn't feel, for good reason, that he's had a lot of support from other allies around it. And so I think he's probably doing that thing he does to try to get some more support from others. Ultimately, any cost that he imposes is going to be added into the cost of the cargo.
Yeah, I view it as a negotiating move. I don't know if that's what we'll get. I think what he's saying to the world is if this is going to be an international waterway, then all these nations of the world that depend on it, you got to help one way or the other. It doesn't necessarily mean cash. It could mean in kind, send some ships, do some mine sweeping.
But I think it's European nations he's talking to, because the other Middle Eastern nations have been helping. They've been very involved, and in fact, they've taken a lot of missiles from Iran because they're allies of the U.S., or at least economic allies in this front. I think he's targeting it to Europe.
I was reading it more, maybe it was like a toll or a payment in kind, Jackie, but I was also thinking when Larry Kudlow sat here last Wednesday and he said all that money that we were going to, companies and other countries were going to invest in Iran, maybe we take 20% off of that. It's the money that they don't get that goes to reimburse us. I think that was similar to an idea of what Larry was saying. Yeah. How do you read this?
Well, all I can do is read exactly what the president said and try to make some sense of that. So in this Truth Social, he actually goes on to say, after he names the United States the guardian of the Hormuz Strait, then he says, as a matter of fairness, we'll be reimbursed at the rate of 20% on all cargo shipped for any and all costs necessary to do the job of providing safety and security to the very volatile section of the world. So I think he's kind of laying out there what he plans to do. I don't like really any of this, to be honest with you, because the Iranians were trying to charge tolls. Now we're trying to charge tolls.
Would you call them both tolls, though, do you think?
To a degree, yes. What is 20% of your, for safe passage?
I mean, I don't, like,
that's a toll.
Iran's saying we'll protect you from us attacking you.
Right.
And the U.S. is saying we'll protect you from Iran attacking you.
Right.
So it feels like on the 20% from Trump is like, we're doing a service for you. You need to pay us something for it. Iran's basically doing like ransom money.
Either way,
we'll sink your ship.
You have to pay something to be able to pass through a strait that you didn't have to pay to pass through before. So I'm a little frustrated by the entire situation and how this has been playing out. And I would just say about listening to the president this morning on this particular issue, I mean, he's very calm about it. We all sort of were chuckling when we heard the audio of him answering that question. And, you know, I have to ask myself what he knows that we don't know throughout this conflict. There have been times where he can seem very agitated when he has, you know, cursed in his Truth Social and whatever to make a point. But he seems pretty calm about this. And I just wonder where we are going with it. Did we want to be the guardian angel of the Strait of Hormuz? No. We wanted to make sure that Iran doesn't have the capability to upgrade to nuclear weapons and to make sure that they're not going to be doing that, you know, process of making them in the future. I believe we've secured that at least for a certain amount of time. But even this morning when Ainsley was talking to him, she said the reports indicate that they're working underground still on weapons. Right. And so I want to see an end to the conflict. I want to see that for the American people. I want to see it for the Iranians. I want the good guys to win, obviously, but I am very frustrated by the timeline of all this. Let's just review for a moment where we are on gas prices. We're at $3.87. We were at $3.79 a week ago. Now with oil under 75, you're only going to see that number go up. And going into the midterms, which Larry actually thinks we have a chance. I believe it was Larry said we have a chance of
Larry's very bullish
winning.
On that, yeah.
You know, gas prices, all this stuff, it really matters.
Dagan, I want to come to you on this. What also matters, I think, over the weekend is Oman maybe also backing away from Iran as we think about the Gulf nations who economically are coming closer to the U.S. than we thought that they were. On Saturday, they proposed 2 routes through the strait, one freely navigated in Omani waters and the other navigated in Iran waters without charge. Then, of course, you have today the president saying, as we just talked about, sort of economic fury again. Does that sort of give you any hope as you think about transport of oil and sort of what it means for the U.S. economy and the likes?
The betting markets have turned their attention to the Bab el-Mandeb Strait, which is the strait between Djibouti and Yemen out of the Red Sea, concerned that Iran, if cornered, will use the Houthis and other proxies to close that strait down. The betting odds have shot up dramatically just in the last few days, given the re-escalation of the conflict in the region. Also shooting up would be the betting that the Federal Reserve is going to have to hike interest rates. The odds of a Fed rate increase have gone from 50% to 70% since the escalation kicked into higher gear about 2 weeks ago. And so all of this adds up to, and if you look at longer term interest rates, you've got them well over 5% on the 30-year and well over 4.5% on the 10-year. All of this adds up to, so higher longer-term interest. Look, it's 4.6. This is higher mortgage rates for the American people, in addition to higher gasoline prices. Also, if the Federal Reserve has to hike interest rates, hey, even if the U.S. government can borrow below the rate of inflation, that's great. We can inflate away the debt, but it's not great if you are borrowing to buy appliances, automobiles, if you have lease payments that have adjustable rate debt, if you're a corporation with floating rate debt that adjust higher. So this all plays into not a pretty financial picture for a lot of the economy. And I'll also note that we get the SPR numbers on Monday, not on Wednesday, and the Strategic Petroleum Reserve in the U.S. Has had an additional drawdown in the most recent week of 3 million barrels of crude. That's week over week. We're now down to 316.5 million barrels, again hitting a new 1983 low. So that is going in the wrong direction. I know that this takes a great deal of time to refill. It's easier to get oil out than put it back in, and it's a loan program. I think it's a barrel and a quarter for every barrel that was loaned out. Nevertheless, that and the Cushing stockpiles, which are kind of below the bottom, like the operating bottoms, that is the NYMEX hub for delivery. This is not a picture that is great for crude inventories in the United States.
Quickly, David, your thoughts long term on how the world's reducing its dependence on the Strait. We've talked about from the Red Sea, Indian Ocean, and I'm going to mispronounce these, so I apologize. Yanbu, Fahira, Turkey, Oman, basically different Gulf nations trying to build pipelines to circumvent the Strait of Hormuz. Long term, to say, we're done relying on you, we want to bypass Iran. Long term, is that not bullish as we start to pull away the levers that Iran thinks it has?
Taylor, it's absolutely bullish long term, but it's very important we understand what long term means. Yeah. It does not mean a year or 2 years. It means 10 years. Mm-hmm. And there are certain things, certain parts of the world that pipelines won't be able to work for. Mm-hmm. There is so much complexity around this. What we did with American domestic energy production independence is change everything. The impact to us right now is a fraction of what it would be if we didn't have the shale revolution of 15 years ago that changed our country. And pipelines, by the way, are a vital part of it. We need more pipelines, and we need more pipelines to get to more export LNG terminals, to get to more LNG that we can ship to Europe, Asia, et cetera. There's so many layers to this. All we can do long term is focus on, from the economic and energy policy standpoint, independence, do our own thing, master of our own fate. There's a lot of oil in that part of the world. There's always going to be. The part I don't know what to say about is that in a business deal, I just walk away from deals all the time if I don't trust the people I'm talking to. If I don't like the people, I'm like, I don't need this deal. I move on to the next one. How can anyone trust Iran? How are we supposed to continue listening to, we announced an MOU or they're doing this, doing that, and then it doesn't last 2 weeks? You're not going to be dealing with trustworthy people anytime soon. Yeah. So this is not going to have an easy ending, and I think we have to understand that. Yeah.
Yanbu is the termination point for the East-West pipeline that Saudi Arabia operates. So, and any oil that is delivered to that export terminal, it has to essentially come out of the Bab el-Mandeb Strait through between Yemen and Djibouti. That's why that's considered such an important choke point at this point. I think they're exporting like 5 million barrels a day, maybe, or more than that out of Yanbu.
They upped it big time, yeah.
I heard 7, maybe trying to get more.
I think 5 goes out. I think there's the 2, it's 5 goes out and then 2 stays in for refining on the coast.
And refining's a whole other piece to this too.
I think that it's 5 for export and then 2 stays there for refining purposes.
I want to pivot and talk about TSMC. This is a wild story about TSMC, but also sort of the broader AI market. 68% surge in revenue in June, fastest monthly growth of the year, up 6% sequentially, which is important because June typically you see a decline due to seasonal issues, and this June you did not see a decline. You saw another incredible month. For the first half, revenue is up 36% for the year. They're completely sold out of their 3-nanometer mode and on track to pull in $40 billion in AI chip revenue this year, about 25% of its entire business. David, is this an indication of chip makers of what we can expect from earnings season later on, as we get it?
It's very important that no one think anything's an indication across the whole board. Every company is different. Every customer counterparty is different. The economics are different right now. I expect you're going to see a real dispersion of results across this whole ecosystem in the quarter ahead.
Okay.